Welcome to Balance of Economy. Before we dive into the data, please note that this is market research for educational and informational purposes only and does not constitute financial advice or a recommendation to buy or sell any asset. Let's look at the numbers.
All right, let's get right into it. Everyone's glued to the price charts, right? The daily ups and downs. But what if I told you the real story? The biggest thing happening in crypto right now has absolutely nothing to do with those price swings?
Yep, you heard that right. The real game is being played in Washington, D.C. They're building a legislative moat, a foundational structure that's going to shape American finance for decades to come. This isn't about hype. It's about the architecture of the market. And there's one key person leading the charge. So let's talk about Treasury Secretary Scott Bessent. He is on an absolute mission to get a comprehensive crypto market structure bill passed, and he's not being quiet about it. He's making his most direct public push yet, and we really need to understand why. And Bessent frames this argument brilliantly. He's saying, look, the US didn't get to the top by sitting on its hands during big tech shifts. He's putting this moment right up there with past technological revolutions. The message is simple. You either lead or you get left behind. Inaction right now is a choice to lose.
Okay, so what is this bill he's pushing so hard for? It's called the Clarity Act, and its whole purpose is to, well, bring clarity. For years, the big, nagging question has been, is a digital asset a security, which falls under the SEC, or is it a commodity, which falls under the CFTC? This bill just draws the lines. It sounds simple, but it's the absolute bedrock you need for any mature market to function. And you might be thinking, okay, but who does this really affect? Well, according to Bessent, it affects a lot of people. Nearly 1 in every 6 Americans already owns digital assets. Think about that. That stat alone completely changes the game. This is no longer some niche tech thing. It's a mainstream economic issue that Washington just can't afford to ignore anymore.
But as you can probably guess, just because it's important doesn't mean it's easy. The bill is facing a pretty serious uphill battle. It's kind of stuck in the gears of Washington politics. A classic tale, right?
And this timeline here really tells the story. You see it passes the House with really strong bipartisan support. 294 to 134. You don't see that every day. But then, bam, it hits a brick wall in the Senate. Now, there was a little breakthrough in March on a key issue, which is great, but look at that deadline. The 2026 midterms are looming. That pressure cooker is on, and it's forcing everyone to the table.
So what's the big sticking point? It really boils down to this one major issue: stablecoin yield. On one side, you have the traditional banking industry. They're saying, hey, there's a loophole here. We need to stop third parties from offering rewards on these things. But on the other side, the crypto industry is firing back, saying, wait a minute, these rewards are essential for us to even compete. And so you have these two massive, powerful lobbies in a standoff.
Okay, so let's just pan out for a second. Let's step away from the political infighting and look at what's really at stake here economically. Because if this bill passes, it's not just about setting rules for the people already in the game, it's about who gets to play next.
Look at the market today. It's already enormous, fluctuating between $2 and $3 trillion. That's a staggering amount of money, but there's a huge piece of the puzzle missing: a certain type of money. And that's the big question, right? With a market this huge, where are the pension funds? Where are the 401ks? Where is all that steady, conservative, institutional capital? We're talking about the trillions of dollars that form the foundation of our economy. They're all sitting on the sidelines, just waiting. And this is the wealth transfer we're talking about, the coming shift from retail speculation to institutional strategy. So what's stopping them? They're stopped by this: a giant regulatory wall. Think about it from a fund manager's perspective. You have a fiduciary duty, a legal duty, to protect your client's money. You simply cannot, you will not, pour billions into a market where the rules are total mystery. The Clarity Act is the wrecking ball aimed at this wall. And when that wall comes down, it's not just money that's going to pour in. All of that new activity needs to be supported by real-world infrastructure. We're talking a massive demand spike for data centers and the battery energy storage systems needed to power them 24/7. So yeah, this isn't just a finance bill, it's an infrastructure bill in disguise. And this really brings us to the main point of this whole analysis today. While so many people are distracted by the day-to-day noise, the smart money is focused on something much, much bigger: these foundational moats. This slide just lays it out perfectly. It's a tale of two markets. On one side, you have the retail focus, daily prices, volatility, what's trending on social media. It's reactive. On the other side, you have the institutional focus:
Regulatory moats, market infrastructure, long-term capital flow. It's proactive. This is the wealth transfer playing out in real time. It's the shift from emotional guesswork to cold, hard, prepared strategy. And we circle right back to Bessent's grand vision. This quote is everything. He's not talking about just letting crypto play in the sandbox. He's talking about welding it onto the very chassis of the American financial system, built on American rails, backed by American institutions, denominated in American dollars. That, right there, is the ultimate moat. And the risk of not doing this, it's huge. Bessent is warning that innovation and the capital that funds it doesn't wait around. It goes where it's treated best. And right now, places like Abu Dhabi and Singapore are rolling out the red carpet with clear rules, and they're already attracting the talent and the money. The US is at risk of losing a race it hasn't even fully started.
So you have all this pressure building, this high-stakes game playing out in D.C. It all leads us to one final critical question. Is this it? Is this the moment that finally flips the switch? That's the data for today. Now, I want to hear from you. Is Scott Bessent the final catalyst for the next institutional bull run, or just more government noise? Drop your thoughts in the comments below. Don't forget to subscribe to Balance of Economy for high-density market insights. Stay sharp and stay informed.